Okay, Aruna.
I would echo all of what Tilewa has said. First and foremost, the theme for the 2013 budget is fiscal consolidation with growth. One, because of what you yourself pointed out, we have a high recurrent expenditure, but over the last year, it's basically been reduced by a few points, and the plan is to continue to do that, because I think everyone recognizes the importance of capital expenditure, particularly in an economy where there's such a huge infrastructure deficit, and where some of that deficit will clearly unlock the potential of Nigeria. One of them I saw 2 weeks ago when I was in the southeast is basically building a bridge that connects the south part of this country and the southeast to the southwest and to the north. And that area is almost an economic cluster. The other one is getting Lagos connected to the rest of the southwest and to the southeast. And some of those projects are the projects that Tilewa has mentioned, are bankable projects which the government is preparing so that the private sector can participate in it. The other thing that I thought was particularly bold, because of this usual talk about the public sector or government crowding out private sector, is that the government has decided to set up a sinking fund to pay down government debt so that you can have private sector participate more actively in the fixed income markets. So the government is determined, and like Tilewa, I think that we need more structuring skills, and we need people to start to think about how they can creatively take advantage of all the opportunities that exist. Some of what the government is also looking at is much more strategic transactions like infrastructure bonds. I've even had the Minister of State for Health talk about a health sector bond that is backed by health insurance receivables. So the government is thinking very strategically and creatively about how to, and sometimes I said maybe if I was on the other side, I'd be chasing after some of these deals and structures.
Is there anything in the agriculture sector that mirrors that?
I was going to, the agriculture sector is big.
It's a third of GDP, but much more than that.
No, it's more than a third. It's 42% of GDP. It's 70% of employment. It's a sector that will basically move the Nigerian economy. And we're all very proud of what the agriculture team is doing, basically given the potential. In terms of fiscal revenues, it's not contributing yet as much as it should do, but this is clearly a sector where we can move up the value chain, where, I think we're the world's largest producer of cassava. We could potentially, we're probably the world's largest importer of rice, yet there's an opportunity we've got rice that I understand is very special and is grown in different parts of the world. We have an opportunity to have a number of agro-processing companies. We in the capital markets are very interested because we see the potential for a number of companies to be listed on the stock exchange. So agriculture is big, moving up the value chain is big for Nigeria, and I think it's probably one of the greatest opportunities for us to diversify the economy beyond the oil and gas sector. So the diversification agenda...
Should be producing food for export.
Absolutely. We need to feed ourselves first. I think food security is a very big issue. I understand, for example, that Thailand drives the rice agenda. And since we're one of the world's largest importers of rice, we're basically dependent on what Thailand decides to do for rice. And some of what we will see over the next few years is resolving that, because there's also a plan to support a number of rice milling plants across Nigeria.
I want to ask you and indeed Coyote in a moment or two about the prospects for the domestic capital markets and fixed income instruments, project bonds and types of things you talked about. But before we leave oil altogether and diversify away from that, Scott, I just want to pin you down a hard answer to a hard question. Is the petroleum industry bill going to go through in the form that people expect? When? And will it make a difference? When you've answered those three terribly easy questions, I just want to tell you, I want you to tell us how important it is for the whole fuel subsidies and the skimming marketers kind of system to be dispensed with.
I think the short, honest answer to the first three questions is I don't know. And now, if you allow me, I'll elaborate. We don't expect the PIB to come through unaltered. There's a lot of domestic politics involved. I don't really want to talk to that because it's not my area of expertise. There are some unresolved issues in the draft PIB, centering a lot of it around royalty payments. And in the end, it's going to be about how we're talking. It's one of the issues on the list. How competitive will the oil industry here be vis-a-vis other oil-producing nations? And that's something that still needs to be worked out. The PIB itself, while it talks about, does address the issue of downstream deregulation, doesn't hit the subsidy issue square on. I don't think, unless I misunderstand the bill itself does not eliminate the subsidy. That's still going to have to be a separate decision that would be taken. In terms of how important it is, the elimination of the subsidy, it's very important in the sense that it will free up resources to be used elsewhere. And I wanted to quickly align myself with the points that Tole was making about these bankable projects for the private sector. And I was very pleased to hear kind of withstand the notion that the government should fund these things, because if they are capturable projects, in the sense that they're bankable because they generate capturable revenue streams, then let the private sector do it. And you have to address the issues of how to unlock the financing for that. Because the money the government saves, it could be spending on those things for which it wants universal free access, such as education, certain aspects of or services of health, public access roads, and these things. These are things the government has to finance. Right? So in eliminating the subsidy, this will be a redistribution of resources and income from one group of people in Nigeria to another group of people in Nigeria, and that's why we've been saying this is really an issue for Nigerians to resolve themselves. There are countries, and I don't want to step into this too deeply, but for the sake of kind of intellectual honesty, there are countries that have fuel subsidies that work, right? But they tend to be very small. And the other thing is they are fully funded, right? And the reason we're seeing fuel shortages here now is you have a fuel subsidy in place, but the importers are not getting paid as quickly as they would like to get paid. And no one is going to import fuel at a world market price and sell it below market prices if they're not getting paid in a timely manner, right? But I first came to Nigeria in 1992-93, and we were looking at the same issue then. So this has been with Nigeria for a long time. I think they've made a lot of progress in dealing with it, getting it out in the open.
Everybody wants to talk about this. Tilly, let me bring you in first. Isn't the structure of the oil industry in Nigeria just so wrong it needs to be broken down and started again from zero? There's a provocative suggestion for you again.
Yes. Definitely there is need for restructuring. I mean, the irony in Nigeria is the fact that we don't refine petroleum products. And we have a huge petrochemical industry opportunity, as we've seen with the Indorama company that took over Element Petrochemical. The dependency and the potential of a petrochemical industry in this country far surpasses that of the basic oil and gas industry. And on the value-added side, I think we need to see how we're going to make those investments. I think those are basics.
And the fundamental structure of the original business needs to be changed before that business can get going, surely.
Well, the IOCs know their way around this system, and I think that they're not going away in a hurry, and they'll always find a way to work things out with the government eventually. I think it might take a bit of a time, but at the end of the day, they'll get it around. And this PIB, I think, is a major restructuring of the oil and gas industry that is more than overdue. Because once we have the PIB passed, then again, we can begin to see the private sector participation and the capital market financing that is required to get these projects through. It's not, everybody knows that a while ago, Mobil did an also condensate plant, which was funded on the international capital markets. And at that point in time, the rating agencies gave the project a high credit rating than Nigeria. So there are deals to be done in the oil and gas industries, and we need this PIB passed so that we can have a transparent system that can facilitate both private sector investments and capital markets and international capital markets, both debt and equity financing.
Very good.
Just very quickly, I would echo the point that Tilewa has made around the petrochemical industry in particular. And I guess it's a balance, because the reality is when you have a subsidy in place, we're just never going to get money going to refining. It's just not going to happen. And really, I think it is very unfortunate that till today Nigeria is importing refined products. So at the same time, if you remove the subsidy, well, in fact, question mark whether the subsidy is actually going to those who actually most deserve it. So it would seem that many of the arguments point to actually removing the subsidy, but obviously that's a big question.